Good morning, everybody. Welcome to the Flow Show, Wednesday, the 12th of February. Going to give you a little warning because I'm currently in the queue for some concert tickets, and I'm 6,844 in that queue, but it's dropped about 11,000 in the last half hour. So I may have to do a quick handover to K-Man if I get to the front of that queue. But hope maybe we'll be over the show before then. Morning, Kay. How you doing?
Morning, Ryan. I'm selling at 6,850. I think this thing goes down, mate.
Yeah. It's already gone down 6,422. You can take some profit already. Take a slice off.
Oh, there we go.
So yeah.
Taking a quarter
Right.
of,
Anyway. Yeah. Sorry, mate.
yeah, I'm taking a quarter of the table, but I'm targeting one.
Targeting one. All right. I'm bid at zero. Right. Mr. Ueda was out and about yesterday over in Japan. Said we'll conduct monetary policy appropriately to achieve the 2% inflation target. Nothing else to add to that from him. We've got the RBNZ next week. ANZ expect a 50 pip cut down to 375, but that might likely be the last cut they do. They see them going on pause after they make that cut. Both the RBA and RBNZ are next week. Over in the UK, Chancellor Reeves is apparently going to break her fiscal rules after growth forecasts are due to be cut by the OBR, the Government Stats Office, the Office of Bodged Responsibility, as I like to call them. These forecasts aren't out yet because they're still in draft form, but we're already getting the leaks. So she's going to be below her fiscal break point, and that means the likelihood of more spending cuts, taxes at the March spring update, as they call it, which is going to be budget part 2 by the looks of things, according to that. Not too much of a reaction in the quid on that news, but we'll see what those forecasts are like when they officially get released near that spring budget time. ECB Schnabel says ECB rate cuts cannot fix structural economic problems. She's right there, but they still help, and that's be something that she, as a German, will be hoping for as well, given the state of their economy. Fed's Hamak says we have the luxury of being patient as we assess the path forward for inflation. We made good progress, but the 2% inflation goal is not in sight just yet. The risks to the inflation outlook appear skewed to the upside, and it will likely be appropriate to hold the Fed funds rate steady for some time, and a rate hike is not in his base case. Fitzwilliams said monetary policy is well positioned to achieve the Fed's goals. I'm going to move on to Powell. His waffle on yesterday, which was by and large a boring event, apart from when he decided to slaughter Europe about the state of their growth over there. Probably the funniest thing I've ever heard out of one of these things. Anyway, he reiterated that there's no rush to adjust interest rates. He says he believes the neutral rate has risen from a very low pre-pandemic level, and he'll also never have CBDC, central bank digital currency, while he serves as Fed chair, which is perhaps a little bit of a poke to Mr. Trump and all his crypto-loving buddies over there. Kay, did you pick out anything for Mr. Powell? Because that's about as much as I got.
No, Ryan, you're right. He's been mostly avoiding to answer questions about his views on current policies. Current presidential policies. Then no, the thing about this CBDC, sorry, CBDC. Well, it's not in the Fed's road book. So from the start, it's going to be a case of housing it somewhere in a corner office of the Treasury, I guess, or creating just a new office. Yeah, for the rest, uh, as you were saying before, it's most of the time just a repeat of the prior FOMC, and that was basically it. Yesterday we haven't got anything really new at all, and the dollar didn't react to it as it was also. I mean. Said by us in the meeting. This is usually the ones that have the less impact on dollar flows.
Yeah, absolutely. You know, obviously, like you said, he did fend off a lot of political questions over what Musk was getting up to in stopping payments and access to payment systems and all that. So we had to do a lot of batting off, as we say over here in the UK. And we do it all again today. He's in the next room of politicians that you'll have to face the music to. So yeah, I doubt I'll be watching that one again. But you never know. You never know. You can never say never in the trading game. Right, UK Trade Minister Alexander was getting his knee pads ready. He said the UK is ready to work with Trump on solutions to tariffs. Now, I did mention that there were some plans afoot, something to do with a security bill that the UK is putting through its parliament, that they might adjust it for the UK because of what the US wants. It's all a big thing. This might have been part of it because yesterday the US and UK refused to sign an international AI declaration. Said it had not been able to add its name, the UK, to it because of concerns about national security and global governance. Now, previously to that, the UK had been sort of towing the line of the EU in terms of AI regulation and that sort of thing. And just in case, a bit of background, in case you don't know, we don't have access to as much AI programming over here in the UK as some of you guys elsewhere do in America because of tight laws pretty much dreamed up by the EU. So it looks like the UK is siding with the US, trying to keep its Old Powers Act going, perhaps in the hope it leads to leniency in tariffs and things. We'll have to wait and see. Right. We know that Australian PM Albanese had a meeting with Trump, had a call with Trump. Apart from possible exemptions, they discussed China aggressiveness and critical mineral supply chains. Now, this is a bit of a sticky wicket for Australia because they've just been repairing relations with China, and now they find themselves in the crosshairs of the US, and so they could be stuck between a rock and a hard place over who they want to please the most, or not end up on the wrong side of. So that's a situation to watch. Overnight, though, we did have Trade Secretary Navarro speaking with in a news interview, and he said that Australia is just killing our aluminium market. And he said, talking about exemptions, that Trump has said that no, we're not doing that anymore. So he's singled out Australia, saying that they are killing the US aluminium market. So it's not all going to be roses and jelly and ice cream for Australia and getting those exemptions, perhaps. And it just shows you that there's still lots of stuff going on under the surface. Japan Trade Minister Muto has also repeated that he has requested to the US to exclude Japan from steel and aluminium tariffs. Now, none of these tariffs are due to hit still until 12th of March, so there's still lots of negotiating time. We are seeing a bit of market reaction here and there, but it probably all ramps up a week ahead of that deadline if there are no deals done. US Vice President Vance was in Paris. He met with EU's von der Leyen to discuss economic issues and security partnerships. He's also going to meet Zelensky in Kiev on Friday And then there was a bit of a story out overnight that got risk trades moving a little bit. AFP News reported that Zelensky was apparently prepared to offer a territory swap with Russia, i.e. some parts that Russia have taken, swapping back with other parts in Ukraine. That got risk moving a little bit. However, it was a bit of an old story. It was actually put out, or the comments were put out earlier in the day from The Guardian, I think, over here in the UK. But they got risk moving. But anyway, the Kremlin has pushed back this morning, saying Russia will never discuss swapping Ukrainian territory it controls for the area Ukraine holds in the Kursk region. It says Ukraine forces will be driven out of Kursk. There's also been a pushback by those guys. Apparently, there's been news in the US that Trump or one of his aides had been speaking to Russian envoys. They've completely dismissed that as not knowing anything about it. So all that peace deals and whatnot, it's all washing around, but Russia seems to be pushing some buttons, Kay, and not towing the line, so to speak.
No, I think people trying to put a couple of things together, seeing that release of that US hostage as a sign of goodwill as well of Russia, things may be on the move, but then we get hours after positive signs emerging, then we get responses like that. Russia, I mean, it's not over until it's over, right? Because I mean, whatever the two parties may say, I mean, the US will have their own opinion. Trump obviously trying to broker a deal, but then the EU is probably going to get involved as well. I mean, we are not at the end of the story yet, but let's say that there is not light at the end of the tunnel, but we have a tunnel. That's where we are right now. Unfortunately, it's not settled yet. I would just like to come back on Japan. Because we saw like a pretty big sell-off in the yen overnight, and it does seem, that it's coming back a bit to what I've been saying about this double-edged sword. Japan versus tariffs versus investments in the US, and the time I was looking at the timing that this thing took off, and there was some talks about those investments in the US, the Nippon Steel delegation going back to the US as well. So I think we are in a bit of like, do we trade risk? Do we trade the Bank of Japan, or do we trade more Japanese investments into the US, which would in somewhere be positive to the yen, right? So I think it's as we were talking, and as I was saying as well, be careful of being too bullish yen, because if they really are going to invest a lot in the US, it could fire back at the yen at some stage.
Yeah, and you've reminded me. I caught a headline, and I meant to follow up on it, but I didn't. That Japan talking about this investment, $1 trillion or whatever it is, and that they might struggle to actually get the money for it. So that might have also been a reason why we saw this lift up in yen pairs, because the yen has pretty much driven everything this morning. It's dragged a lot of pairs higher. But we'll look at those prices in a moment. Just got a couple more headlines to get through. It's still all political. So yesterday there was a headline out from China that it was going to increase oil imports from Kazakhstan. This morning they've also agreed to increase gas imports from Kazakhstan by a third over their original contract. And the Indian oil minister says to expect more Venezuelan oil to come to market. So this is all part of the global games going on. Countries, starting to source elsewhere if they're going to get tariffed on goods going into the US, particularly things like energy, or they're going to face problems getting energies. They're locking up supplies from elsewhere. So they're making sure they get enough to come in, and that things aren't affected by all these tariffs and whatnot. Trump is they're still warning Hamas about these hostages, saying if they're not all out by Saturday, all bets are off. We're also going to be watching his desk today because he's got some executive orders apparently coming, and he was asked last night if reciprocal tariffs are still coming today. He said, "We'll see." Now, this is the tariff threat that he put forward last week, that anyone who's tariffing the US, he'll tariff them back. This is on top of steel, and this is on top of the Mexico, Canada immigration drug stuff. And all these tariffs that he's going to slap on will just come on top of everything else. So they're going to pile up and pile up. So what he's going to reciprocate with later, we'll have to wait and see. But that's probably going to come from his office some point in the evening, 3 o'clock US time, about 8 o'clock GMT. Kay, we're playing that game again. I don't like all these evening meetings he has.
No. And depending whether he's a bit late, whether he still has to finish his Diet Coke, it could actually come again quite near to the close of the day. So we've been saying it so many times. It's an old record now. We are living day by day concerning what's going to happen to the tariffs, and obviously we have seen the impact that it may have on various currencies, various countries. So we still have to be very, very flexible in what we are doing as traders, because one signature can mean the opposite the next day, as we have seen with Mexico and Canada. So it's the situation is extremely fluid still, and that's how we need to look at it.
Yeah, absolutely. Right, well, might as well start with Dolly Yen, seeing as we're there. Yeah, it's a very strong move overnight. We're certainly well above the 152, but lo and behold, here we are running into everyone's favourite level at the moment. A lot of people waiting to short this one in our chat room, me included. I know K-Man's on it as well. So some of us running shorts in this, already doing some slicing and dicing into support there. Support comes in at this old 153.30s area, 30, 35, whatever. It's a small level. We've probably got some more support, 152.90, 153 if we do pull back. But otherwise, we're holding here for now. We'll see if we bust that before CPI. If we do, 154, 154, 45.50 is the next level above. Kate, I'm going to pass it over to you because I'm now number one in the queue.
Yeah, go ahead, mate. I'll take over. Yep.
Give me a second. All yours.
Alrighty. Cheers. So let's stick to the yen for a little while, because there is an additional level that we should be watching here, and that is the cloud. And as you can see, this cloud comes in roughly where this 153.75 lies. This resistance lies that we tested like very, very briefly, went above right now, but we are still hanging very close. So the cloud comes in, the top of the cloud comes in today at 153.60. So just know that the Japanese are eagerly watching clouds, and I think going into the US CPI this afternoon, probably the 60.75 is where what we should be watching in the dollar yen, because we do have the US CPI upcoming, and it is still a January number, that CPI. It could still be taken as a little bit back looking, but again, if it comes out sticky, we can't rule out a wonder above 154. Okay, before the thing perhaps turns back lower. I'm keeping this like extremely tight, because it's just a level play for me, rather than actually thinking that we are done, and it should go really down. So I've sold it, luckily quite close to the top this morning, this dollar yen, and I've already taken some back into this very little support line here. So I'm making it an as free trade as possible. But a level is a level, so for as it's respected, we will see what happens after the US CPI this afternoon. If we cap here, then this zone is going to get stronger on the dollar yen again. It is what I thought would have been the level where we would find sellers. We will see. I think those people may actually wait for the CPI to come out and then make a decision on things. So that is for the yen concern. But if you look at yen crosses, and then I'm going to take just one example, and that is the euro yen. Yesterday I said like be careful about this 157, yeah, and all the yen crosses have been rallying overnight. So it's not a dollar move that we saw overnight. It is a yen move. So when it's a yen move, we're gonna be looking at the crosses as well. And this one example is that we are now well back into this triangle on the euro yen, and these things will also need to find resistance and starting to come back down for the dollar yen also to have a chance to cap. It's a bit like when you're trading Swiss, or well, how I trade Swiss anyway. I mean, if you want to know what the dollar Swiss does something, but if you want to know the strength of Swiss or the weakness of the Swiss, go into the crosses and look what they are doing. And so for the yen, this all the yen pairs are showing similar kind of pattern. So be a bit careful what you do with dollar yen, for instance, as well. As you can see here, the Aussie yen is doing pretty much the same thing. For those who have Aussie yen, which may be an interesting one to watch, if we go another like let's say percent or so higher, we are going to run into traffic here. So the Aussie yen, I would, if you look at this way, I would get a bit interested in seeing what the reaction would be if we run into the 97.5, 97.70 level for the more medium term on this one. Okay, so that's going to come up with, if the yen would break above 154 on the dollar side of things. Yeah. Yeah, let's do a bit of on-demand DJing here in the pairs. For me, dollar cat is still unchanged. I am not on the right picture because I don't see my 142.90. Um, maybe I'm maybe 143.90. What? Oh yeah, it is there, but it's a bit wide. Okay, so on the wider side, we are still 142.70, 143.70. Okay. We have to break above 144 to start going again, and below 142.70 to go lower. That is relatively simple for me, Deresh, on the dollar CAD right now. And it looked very offered down here yesterday again, but then it held, and we are trading back above 143. And similar here, it looked very bit when we were retesting the 143.70, and then it came back down. So there's your range. It's 100 pips roughly range. That is what is going to drive the Canadian dollar. Now, if you trade dollar CAD, we have this US CPI coming out later on today. So we will have a dollar move. But as we know, the Canadian situation hangs more on what potentially may happen um, to tariffs and the impact on the Canadian economy, rather than really perhaps being driven by a pure dollar side of things, or on data side of things. So be a bit careful. If the US CPI would be sticky and we're going for a look here, it may fade, okay, for as long as the situation is not clear surrounding the tariffs. Similar thing if on the downside, if we get a test here, the algos may find it funny to go for a run down to 142.5. 142.30, and then we bounce again. So be a bit careful. For me, this 142.70, 143.70 looks relatively solid as a range right now. And then moving over to yeah, cable is could be potentially an interesting one here. And there as well, we can see that since we've broken below the cloud, we haven't really been too close to it. We came close a couple of times, but the cloud is not too far away if ever US CPI would undershoot. If the US CPI would undershoot and the dollar would get a bit of a knock on the head, we have seen, barring yen and perhaps barring Swiss, we have seen the dollar a bit on the back foot over the past couple of sessions. I wouldn't rule out a move in the cable that potentially could go for a little bit of a test of that zone, and then I'm talking about 125, 125.20. Okay, the cloud today comes in at 125.15. So bringing it over then to the more shorter term, we can look at it here. We are in this bit of a triangle on the cable. And if you look at the resistances, yes, we have something at 124.80 as well. But above there, you're talking about this 125, 125.10-ish. If that would break, I wouldn't rule out a test very closer to the 125.5, and why not, a bit higher as well, over the course of the next session, 2 sessions or so, especially if we continue to get on the tariff news relatively good vibes versus the UK. Before we start to think again about Reeves and tight budgets and all those kind of things. I'm a little positioned that way, as the people know in the room, and as you guys already know here as well. I am quite actively trading those positions because we have been talking so many times about the fluidity of any news that can hit the markets right now. I don't think that sterling is completely out of the woods, and we go a lot higher. But I mean, for the time being, in the short term, it is again looking a little bit more positive. What needs to hold? I think in the short term, 124.15, 124 is going to be your first point of measurement. If we get a sticky CPI, it could get back down to 123.65, 70, where we were before. But it's going to take something bigger, I think, to start breaking 123 and a quarter, 123.15. That is now my level that I'm going to really, really be watching very closely. For the time being, my instinct is telling me that if we get back down in those mid 123s, I'm likely going to add to very small longs again and trying to go for a break higher at some stage. Ali, okay, why every central bank and his dog is saying today CPI may be strong, which in turn will be bullish for the dollar. I don't know why my sixth sense is not accepting this statement. Why is every central bank saying that CPI may be strong? Well, they're all very scared about second round effects on inflation, which would right now mainly be driven by in the immediate future, driven by tariffs and stuff like that. I mean, they're all scared of it, more than being convinced that it will happen. That is what my feeling is all about it. It's just like, oh yeah, I told you I was afraid of this and that this may happen. That is more the case because none of them, apart from the Bank of Japan, none of them would like to hike due to tariff-led inflation. This would be the worst case scenario for central banks, especially if you look at central banks like ECB or even the UK, where the growth is anemic at best. They would hate to have to hike again right now. Okay, so but they all are just scared that it may happen again. Let's move over to the metals quickly. Ryan, are you back with us? Is that
I am.
what I
I am.
understand? Okay, let me look at the metals, and then if you want to look at anything specific, I'm going to hand it back over to you, mate. Okay?
Yeah, no, carry on, mate. Carry on.
Okay, gold. So I was I was cautioning against this move, okay, that we could see. We are here. We're at 28.80, 28.78. Um, it's a bit steep for my liking, but I guess that if we get under here and hold under here, we may see a bit of a move lower. We've already seen a move of the likes yesterday. Then we had the bounce again, but we're coming back. We're still holding. We're still holding, and you know what it is. If a market holds, it holds, and there's no discussion to be had about it. But I'm going to leave the boat with my last little leftover. I was fortunate enough to be able to sell into this trend line. Basically, I didn't take these last 20 bucks, but I was fortunate to sell most of my position out on this way up. So risk is absolutely zero. I was long from around here. But here I'm going to still be cautious. Okay, there is a possibility that we are going 28.60, 28.35, 30. It's all possible in a round of perhaps a little bit sticky CPI will be an excuse to go for some stops, I guess. Or less attention may also be one of the reasons. Okay, if their stories heading rearing their head up again about those gold revals, if that's causing a spike, I think it's not the right reason to be long, if that's the only reason. But if we, in a natural way, start to move back above 29.10, 29.12, I think this correction will be over again, like every other correction that we have seen since the start of this move. And then we're going to go back for the old highs, or perhaps why not even fresh highs. But for the time being, I'm a bit cautious with this move. Silver as well, I was cautious yesterday. We had the drop through this level, went for a round of stops. We just didn't reach the level that I was pointing out yesterday, around 31.15, 31 the figure. We are back in this zone here, 31.60.80. I I'd say keep it simple, 31.60.80. See where we come out after the CPI. If it's on the top side and we keep this zone here, perhaps a move back to 32.5. I don't see too many reasons for it to go much higher right now. Okay. I can see risks for it to go a little bit lower right now, which would be Trump coming out later today and signing executive orders, a very sticky inflation. Those are those are reasons for me to go and retest the bottom end of the channel. Here a bit of a broken level, a bit of a fib in those low 31s, and then we will see. Okay, if we get down there, then we will see and reassess the situation, whether it's continuing down or whether this is enough and it's just again a correction and we continue to push back up. Um, I'm roughly through. Oh yeah, no, the euro dollar. Euro dollar is on interesting levels here. 103.80. I also think that we have a bit of cloud activity around here as well. I'm just yeah, exactly, and it's all happening around 103.80. Okay, so 103.80. We're very close. I guess that's your level to monitor coming out of the CPI later on today. And then above there, I've got a bit of activity anywhere between 104.10 and 104.30. 104.10, 104.30, that is going to be a bit of a zone to watch. As we can see, there has been activity every time we are in that zone. Okay, so this is your next level of to monitor. And if we start to fail, 103.52 close, I would say 103.30. That's where we stopped a couple of times. And when we broke through, it accelerated. 103.30s, that's the nearest level. Look, if it's only for the CPI, which is a January number, I personally would say the moves that we see on the back of it may not be lasting unless because we look at the moves that we saw over the past couple of sessions, the dollar trying to give back a little bit, unless it disappoints. If it disappoints, I think the move could be a little longer lasting. And that is what I'm looking at for today. And with that, Ryan, I'm gladly giving it back over to you.
Thank you very much, mate. Not sure I've got much more to add to that. I'll get it back just quickly though. Where are we?
Did you get your tickets?
No, fucking didn't.
Oh,
Got all the way
dear.
through the queue. Get in there, nothing. Blank screen. Fucking waste of time. Right, I'm not going to talk about it. Or I'm going to swear a lot. This is second day on the trot. Ali, I'm going to see.
And he's asking, where are you going? Well,
Yeah.
nowhere.
Where am I going? I'm trying to go and see Black Sabbath, the big gig they've got going on in the summer. At two hopes of that at the moment. Anyway, right. So, am I sharing the screen? Can you see my screen?
Yeah.
Yeah, cool. So I know Ellie, you was asking about CPI earlier and what it's going to do for the dollar. Keep an eye on this yield, US 10-year yield. Okay, we're back above this 4.5. We haven't really retested it yet, but this for me is the decider. If we're back under here and holding under here, you're probably going to see the dollar maybe weakening off a bit. But it's a bit messy today with the way yen's pulling the strings at the moment, and that could all change. We could move to the dollar side of things when the US comes to town and opens up later on. But if you want a guide over what the dollar's doing, pairs like dollar yen, keep an eye on this 10-year yield here as to what side of that red line we're sitting on after. Right, that's it. I'm done. Not much else to add to that at all. Let's keep an eye on headlines. Nope. So we'll have a nice early one today. So have a great day, everybody. Thanks, Kay, for all your wonderful stuff, and we'll be on Face a bit later. And otherwise, we'll see you all tomorrow. Have a good day, everyone.